This training will review some of the selected major changes to the Uniform Grant Guidelines as they're incorporated into the Education Department's General Administrative Regulations. These are changes to your federal grant regulations that will impact all your federal grants you receive within your LEA. In this training, we're going to talk briefly about the UGG revisions, why they were updated now, some general reasons that the Office of Management and Budget gave for making the changes, the effective dates, a discussion of the citations that were changed and how that impacts your local policy, some of the selected changes in the regulations that may impact you the most, the next steps for some activities that you need to consider doing by July 1st of 2021, some other changes that will be coming in the next year that will impact your grant programs, and how you can submit questions to be included in an updated FAQ document, which will be placed on the website and updated regularly as more questions come in. So why was the Uniform Grant Guidelines or the federal regulations revised now? The Federal Uniform Grant Guidelines are the requirements that cross 27 federal agencies, and the federal statute requires they be reviewed and to be revised as necessary at least every 5 years. So there is a Federal Register notice that posted the changes to the new Uniform Grant Guidelines, or you can go to the ECFR webpage for a full version of the regulations, which includes all the changes. I can't stress enough that as local staff, it is vitally important that you independently read the new regulations or the changes, depending on your level of familiarity, review those changes, and see how you need to implement these revisions to the federal regulations in your local policies and procedures so that you ensure that you are remaining compliant with federal regulations on your federal grant programs. So if you're an experienced federal program director or experienced business manager, you may want to go to the Federal Register notice that announces only the final changes, where you can read about what actually changed in the Uniform Grant Guidelines. The link is on the screen, and you can find this Federal Register notice online. However, if your familiarity with the Uniform Grant Guidelines is less, or you're new to managing federal grant programs, you will want to go to the Electronics Code of Federal Regulations, or ECFR website, where you can see a full, complete version of the Uniform Grant Guidelines for a review of all the federal regulations that your federal grant programs must follow to be compliant. So what were the general reasons for making the changes that are incorporated into the Uniform Grant Guidelines? Well, there are procurement changes that were added to the Uniform Grant Guidelines to better target areas of greater risk and to make sure that grantees were conforming with the statutory requirements. They also wanted to strengthen the merit review and improve government-wide approach to performance and risk. This is not new for our grants from the Department of Education. The Department of Education has always had a risk assessment process and has always had performance metrics for their grant programs. But that was something that was very new in the Uniform Grant Guidelines for other federal agencies. They wanted to standardize terminology and data elements to make sure they were aligning with other federal requirements. The whole purpose of the Uniform Grant Guidelines was to align award, whether it be a contract or a grant, to align the awarding requirements across all federal agencies. And what they found is they had other pieces of statute had requirements that they also wanted to align to. They wanted to change the closeout process to reduce burden, which in the end really will give LEAs much more flexibility and a little more time to do the liquidation process to close out your grants. And they wanted to take the opportunity to clarify common areas of misinterpretation from people's reading of the federal guidelines. So when did the new revisions to EDGAR, which incorporates the UGG, When did they go into effect? Well, there's two sections of the changes. Section 216 relating to the items and vendors that are considered a risk to the nation, and Section 340, which deals with termination of grant awards. These two sections became effective on August 13th of 2020 when the changes were finalized and published in the Federal Register. All the other sections that impact your LEA go into effect with any new federal grant award that's released November 12th, 2020 or after. So this is a new award from USDE to the state after November 12th. The first new award that we've had was the ESSER 2 grant. So ESSER 2, ESSER 3, and all your July 1 grant awards for all your other programs will be under the new regulations we're discussing. It's also important to note that your carryover funds from current year or previous years follow the new year's rules whenever they become carryover. So any carryover funds from the current school year, when they become carryover on October 1 for the additional 12-month carryover period, they now follow the new rules in effect for the current year, which means they would also follow these new changes. So one thing that's important to notice is that the citation numbers throughout the Uniform Grant Guidelines or throughout 2 CFR 200, which is the federal citation, changed in a number of places. One big change is that the definition section is no longer numbered separately, but all under one citation. They also added new regulations throughout the document, and they added new specific items of cost toward the end of the document, which changed the numbers for other items of cost that followed. So much of your Uniform Grant Guidelines in Part 200 changed the citation numbers. And so this is going to be key to your local policies and procedures being updated. So what are some of the most significant changes that you need to be aware of? 200 Part 1 is the definitions, and they added and adjusted several definitions in this section. One of the new definitions is related to period of performance, where they define period of performance as the total estimated time between the start of an initial award and the planned end date, which may include multiple budget periods. By defining a period of performance as the total multi-year planned program, they're going to give you individual budget periods. And the period of performance being defined as multiple years does not commit any federal agency to actually fund the award beyond the current approved budget period that they're offering. Since you have 27-month availability on most formula type grants with a 15-month budget period and then your 12-month carryover period under the Tidings Amendment, you have a 27-month period of availability on your grant funds. Under this new definition of period of performance, it's important to note that you should not be budgeting for 27 months. Your budget for that grant is for the 15-month actual period of availability or your budget period. And then you have a 12-month carryover period under the Tidings Amendment, which becomes a separate budget period. So it's important that you budget your full amount of funds and you plan to expend those funds in the 15-month actual budget period. Remembering, even though you have 12-month carryover on most of your formula grants, high carryover is still considered a risk factor. High carryover is generally defined as 25% of your grant, unless it's like Title I Part A, where you have a statutory limitation of a lower percent carryover. In 200.208, the section that determines specific conditions that can be placed on your grant awards, the change is basically that the specific conditions can be adjusted either by the federal government, the federal awarding agency, or by TEA as the pass-through agency as needed and determine by either the awarding agency or the pass-through. So what this means is where in the past we have had statutorily required specific conditions that would be placed on grant awards when the grant was determined to be at risk, TEA now has the flexibility to adjust or lessen those specific conditions based on the risk level of the subrecipient being you, the LEA. So this would be an example that we could allow advance payments, or we could require less documentation for implementation or reporting, or less monitoring, or not require prior approval if you were a lower risk subgrantee. In the past, we had a set of 6 or 7 very specific conditions that were placed on awards. Now, under the changes to Section 208, we can adjust and monitor those specific conditions based on the risk level and the concern of the level of risk of you, the LEA. .210 talks about non-binding guidance. Under this revised regulation, the federal agency cannot reference guidance as a part of the terms and conditions of the grant award. This makes their guidance documents and FAQ documents truly non-regulatory guidance. And it specifies that the only way the federal agency can impose legally binding requirements on a subrecipient of a grant is if they go through the public notice and comment process. So the federal agency being required to have public notice and public comment process before they impose any additional requirements on a grant, that does not change TEA's ability to include additional requirements in a grant program if it is to meet our federal or state requirements. So for example, under a grant program, if TEA has a reporting requirement to the federal government, either General Accountability Office or U.S. Department of Education, we can include that reporting requirement in your LEA grant so that we are able to meet our federal requirement. However, under this regulation, we cannot change programmatic requirements such as set-asides. ESSER 3, for example, requires the grantee to expend 20% of their funds on a certain type of activity. TEA cannot change that requirement. They can't make it less, and we can't make it more. So the only time the TEA can change programmatic requirements if it is to allow us to meet the federal requirements that has been placed on the agency's grant award. Section 216, remember this is one of the sections that went into effect on August 13th. It deals with defining vendors who are owned by foreign entities or certain foreign governments as being a risk to the nation. And it puts some limitations on certain types of contracts. And this applies to any new contracts, new services or equipment that's purchased, or any renewals or extensions of existing contracts or service from these identified vendors. So this is a section that it's really important that your local legal staff review and determine if there is any impact on your LEA by this change in the federal regulation under Section 216. Section 309 actually gives some additional flexibility, as many of these changes are actually providing additional flexibility. This section is revised to allow the pass-through entity, which is TEA, to also have the authority to approve extensions to grant awards that are not covered under the Tidings Amendment. So Tidings Amendment is what gives your formula grants carryover for an additional 12-month period. Discretionary grants, either from TEA or from the federal agency, do not often carry a Tidings Amendment carryover authority. So this new revision in Section 309 would allow TEA to approve no-cost extensions to discretionary grants for the LEAs. The new extension does create a new period of performance and a new budget period, as we discussed earlier. TEA would now have this flexibility that in the past only existed at the federal awarding agency level. Also in Section 309, the wording deleted TEA's authority to allow pre-award costs in the grant applications. This is somewhat addressed in a later section in 458, but under Section 309, only the federal awarding agency can allow pre-award costs to TEA's subgrantees. And while we did request an across-the-board authority from USDE back in November, that request is still in negotiation, but USDE has told us that we can issue an EdFlex waiver, which would cover those grant programs that are covered under the EdFlex authority, and that we could put that administrative waiver in place to allow TEA to issue pre-award for those selected programs. While that's a good option for the programs that are covered under EdFlex, there's many programs that we issue grants out of the Department of Education that are not covered under the EdFlex authority. So this is only a temporary measure that only helps us with certain programs and certain sources of funds. So we continue to negotiate with the Department of Education to try to get broader authority to allow pre-award costs. You will see to the administrator address letter coming out soon that addresses the EdFlex waiver authority that we're creating for the administrative waiver for those programs that we can issue that waiver for. Section 320 is a big section in procurement and has several changes, many of which add flexibility for the subgrantees. It does reiterate the requirement that as a subgrantee, you are required to have and to use your documented procurement procedures that align both with state procurement requirements and the federal requirements for federal grants under the Uniform Grant Guidelines. It also classifies the 5 procurement methods into informal, formal, and non-competitive. This is really not a change in the procurement methods, but it's just a different classification. And you will hear in the changes to the UGG, there will be references to informal procurements versus formal procurements rather than spelling out the individual procurement type. So it's just a classification of the existing methods of procurement. So Section 320 contains those 5 methods of procurement, and it has several changes to the micro-purchase method. It reiterates that you are required to distribute micro-purchase to the maximum extent practicable among all qualified vendors in your area. The price that you pay for a micro-purchase, which is much more flexible procurement method, must be a reasonable price. But it goes on to define, and this is new, that you must determine price reasonableness based on the research you conduct, your experience with purchasing the product, your purchase history, and any other information, and that you must document how you determine that the price you paid for that micro purchase to that vendor was actually reasonable. Section 320 officially dictates that the micro purchase threshold is officially set at $10,000 as an aggregate across all your federal grant funds in the fiscal year. It also gives you flexibility that you may self-certify a threshold up to $50,000 if you are an eligible subgrantee that has a low-risk auditee status from your most recent federal audit, or you conduct an internal risk assessment to identify, mitigate, and manage your LEA's financial risk. Subgrantees may only determine your local threshold based on your internal control procedures, your risk level, and your documented procedures. If your LEA decides to self-certify your own micro-purchase threshold above the $10,000 amount, you will need to develop your own written policy which identifies your threshold amount and justifies that amount. Your federal auditor will ask for this policy when they're conducting your federal audit. Now, because Texas has a more restrictive rule under FASRAG that requires competition starting at $50,000, and we all know that federal regulations require you to always follow the most restrictive rule, your threshold would be limited to $49,999, even though the federal rule allows you to go up $1 more to $50,000. You must meet the state rule of competition at $50,000. So that means your maximum threshold is $49,999. Now, if you implement a self-certified threshold of $10,001 up to $25,000, you're only required to notify us of your threshold amount. If you certify a threshold of $25,001 up to the $49,999 maximum threshold, you're going to notify us of your threshold amount, and you will need to submit your written policy to us. You will also need to submit your verification of your risk level in your most recent federal audit, or your internal risk assessment and internal controls for mitigating and managing your own financial risk. We will be randomly selecting these policies and verification documents to monitor compliance as part of our own internal controls on micro purchases allowed under our sub-grantees. One of the big flexibilities also covered in Section 320 is that it specifically adds micro purchases as an allowable non-competitive procurement. This is great flexibility for you, and now you have 5 options for when you can have a non-competitive procurement authorized. It also clarifies that during the public emergency, a non-competitive procurement is only allowed when it is the issue of publicizing the competitive solicitation that is causing the delay in the process for you to receive the needed goods or services. So this section on non-competitive procurement has some adjustments to give you more flexibility. Section 322 is commonly called the Buy American provision. It states that to the greatest extent practicable, the LEA must provide a preference for purchases of goods and materials produced in the United States. And this preference must be included in all your subawards, all your subcontracts, and purchase orders. Section 340 is your second clause that went into effect in August. This adds another reason for termination of a subaward. It allows that the subaward can now be terminated for no longer being effective toward the program goals or the agency's priorities. So it just adds an additional reason that a subaward can be terminated by the awarding agency. Section 344 is a great flexibility for LEAs in that it increases your grant closeout timeline from 90 days up to 120 days. This new provision will give you as the subrecipient the full 90 days to close out your awards, which is currently a 60-day period. So unless there is an extension approved, all your obligations must be liquidated and closed out no later than 90 days after the end of your grant period. TEA will have the remaining 30 days to do the closeout period at the state level. Now remember that before this can go into effect, USDE has to change their closeout process before TEA can then implement this change for the LEAs. So we expect USDE to have their process changed in time for this provision to actually be implemented with your new grant awards. There are some changes in the indirect cost rate language in the requirements. Program evaluation now must be charged always as a direct cost and not be charged as part of your indirect cost. They also made a change in the de minimis rate, but it still does not apply to education grants because the de minimis rate is always an unrestricted rate, and normally unrestricted rates are not allowed on USDE grants. But if you hear another presentation by some other entity, they will likely go into great detail on the additional flexibility of the de minimis indirect cost rate. But remember that mostly it does not apply to your education grants. TEA still issues your LEA indirect cost grant because 76.564 oversees the new section 332A4 about accepting the LEA indirect cost rate from another agency. So you would have an indirect cost rate that has been issued by TEA, just like always, even though this section did get updated in the uniform guideline changes. In section 403, the basic factors of allowability of cost, they added that the cost must be incurred during the approved budget period. This is really nothing different, but it was a misinterpretation by some people reading the section. So they have clearly identified that all costs must be incurred during the approved budget period for it to be an allowable cost. And they did not remove any of the other requirements of the section. So for a cost to be allowable, the federal regulations still require it to be reasonable, necessary, and allocable to the grant program. The cost must comply with all federal cost principles of the federal award and be consistent with policies and procedures and be applied uniformly to both federal and non-federal activities and cost. It must be consistently treated as either a direct or indirect cost across all your LEAs programs, be determined to be in accordance with GAAP or the generally accepted accounting principles, not be included or used to meet any cost sharing or matching requirement. It must be adequately documented and have been incurred during the approved budget period. Now, 200.458 is the second section that deals with pre-award costs. It states that pre-award costs are only allowed after the effective date of the grant and with written approval of the federal awarding agency. These costs must be charged to the initial budget period of the grant unless approved by the federal agency or pass-through entity. So this is the section where it took out that the cost could be with written approval of the federal awarding agency or pass-through, which is what was in the previous regulation. So that deletion of or pass-through took the authority away from TEA. The new language only allows TEA to approve the budget period for which the pre-award can be awarded, not to approve pre-award cost itself. Now, TEA likely still does have authority to allow pre-award costs on discretionary grants because discretionary grants are covered under EDGAR Part 76, and the Tidings Amendment does not apply to discretionary grants. But we definitely do not have authority to allow any type of pre-award on any formula grant. Once we get that EdFlex waiver we talked about earlier, we will have the authority to allow pre-award on some program source of funds, but not all. $200.471 talks about adding telecommunications and video surveillance services and equipment as generally acceptable unless it falls in the categories under Section 216. And remember, Section 216 is vendors that are deemed to be a risk to the nation. That's also the section that went into effect in August. Normally, people think this would not apply to you, but with all the telecommunications and video surveillance that are now used related to school safety, You may need to have your legal authorities look at your telecommunications and any video surveillance services or equipment you're purchasing to make sure it doesn't fall under this 200.216 section. $200.475 strengthens the language a little bit and reiterates that charges must be consistent with your subgrantee's written travel reimbursement policies. It retains the requirement for the subgrantee to document that participation in travel by an individual, that individual's role must be necessary for the implementation of the project, or it is not allowable for you to pay travel out of the federal grant for that person to travel. So what are the next steps? What do these changes mean for you and your LEA? First, I want to reiterate again, it's vitally important for you to read and review the Uniform Grant Guideline changes for yourself, and that you then take it upon yourself to train the staff within your LEA. When you're training staff, make sure you're training both program and fiscal staff on the changes, and take this time to remind staff of the basic grant requirements that apply to all your federal grant programs. Make sure you update all your local policies and procedures to align to the new citations and to the new requirements. Specifically, make sure you update your procurement procedures and you develop a new policy or incorporate the micro purchase threshold into your procurement policy that already exists. Remember, this policy update or new policy must be done by July 1 of 2021. Because this requirement will be monitored, and your citations in your policies will be checked in your federal monitoring for the 21-22 project year or school year. Just as a reminder, if you haven't already, make sure you've updated your policies related to the pandemic. The issues around compensation and benefits, time and effort, any travel reimbursements that had to be adjusted, allowability of cost, your inventory management procedures. Ensure your effective date is on the policy update and state that it only applies in times of a pandemic or a disaster. But if you haven't already made these policy changes, make sure you get those done before the July 1 new grant year starts. All right, what's coming soon over the coming year that's going to impact your grants? The Texas grant management standards have been released. They were formerly called the Uniform Grant Management Standards, or people call them UGMs. The Texas grant management standards will become effective in January of 22. They will be aligning many of your state grant program requirements to align to the federal regulations in many aspects. You as LEAs may get some flexibility under the Texas grant management standards because not everything will be required to apply to your state grants. But what that does is it will create that you have two different set of grant rules in some areas for your state grants versus your federal grants. So this will be coming soon. We will start putting out some information in the fall about the Texas grant management standards and how they're going to impact some of the requirements in your state funded grants. You've also got a TTAA letter coming out soon, which will highlight some of these major changes we've talked about in this presentation and talk about the next steps that we just covered that you need to make sure you've taken these actions and done these things by July 1. So if you have questions about the regulation changes or the EDGAR regulations in general, you can submit those questions by email to grantsupport@tea.texas.gov. We will create an FAQ document that will be updated regularly on our grants website based on the questions that you submit related to these EDGAR changes. We'll be using a different type of FAQ format that can be updated in live real time. And while it will not be formatted as a Word document you may be used to, it does give us the flexibility to get answers out quickly, and then we will send the Gov Delivery email bulletins out to let you know when there has been an update posted to the FAQ document. As always, you can reach out to your Regional Education Service Center for assistance if you have questions about the Uniform Grant Guideline changes or about the Uniform Grant Guideline regulations in general. You may also contact me, Corey Green, Associate Commissioner and Chief Grants Officer, or Christina Villarreal, our Senior Director for Grant Administration. You can email questions to grantsupport@tea.texas.gov.